Let's talk to Clive Lambert from Futures Tech. Very good morning to you, Clive.
Hi, Nick. How you doing?
Very good. Right, we've got 4 charts to whiz through. Let's kick off with the first one. We covered these markets a couple of weeks ago. Obviously, the markets have headed south since. What are your latest thoughts on the S&P future? We got the daily chart up.
Yeah, okay. So a couple of weeks ago, I said we were in a rising trend. It felt a bit complacent to me, but we were still going up. There was nothing to worry about. But over the course of the last week or two, we've started to break down. We've started to break support levels. The first one we broke was 2,907, and then we broke 2,868. We broke that on Wednesday and saw a really big reaction. And that big reaction has taken us down to that green line on the chart. What is that green line? It's world famous now. Everybody knows about this. It's the 200-day moving average, okay, which seems to be the thing that everybody watches, especially in US markets. We have posted 2 closes below the 200-day moving average since June 2016.
Right.
One of them was the 2nd of April, and we recovered the next day and then rallied again to new highs. The second one was yesterday. We closed below it yesterday. Now, we've tried to recover this morning, and in European trade, we're currently above there, but it's Friday, so, you know, it's important as well for the weekly charts as well. And that line is at 2,767 for the futures. So that is our absolute key level tonight. When we coming into the close tonight, where the S&P will be in relation to 2,767 is absolutely massive as far as I'm concerned. We're sitting on a cliff edge here.
Understood. Okay, well, let's move on to the next slide. The Dow Futures. Is this as grim?
It's the same chart, really. It's a similar thing. It's a very similar thing. We did duck through the 200-day moving average a bit more seriously in sort of July time, and then recovered it. But again, and there's a rising uptrend line on that chart. It's at 24,870. So that's and we bounced off of that yesterday. But again, really is creaking, this one, and the 200-day moving average is the level that we should, that everyone seems to watch, and that's at 25,000. I keep getting the thousands mixed up now. 25,150 so that's the key level today in the Dow. And again, cliff edge stuff.
Understood.
If we close below there tonight, and then we break 24,870, then we're going to 24,150 straight away without, and we probably won't even touch the sides, and then we've got to start thinking about 23,000.
Understood. Okay, let's move on to the next slides. Let's turn our attention to Europe. The DAX on the weekly chart, again, lower highs and lower lows by the looks of it, which is
I mean, this is weak. This is a weak looking chart anyway. I think 2 weeks ago I said, look, we've got, the charts look very different either side of the pond. We were still 2 weeks ago. It was still, US was still making new highs and going up, and you couldn't fight against it. But this one it's a different story, and we've been, we're on our third red candle. Third week posting a red candle. It's looking that way anyway, I'm pretty sure, unless we get an enormous rally today. But what we did in the DAX yesterday was broke, or in the last couple of days, broke 11,720, which was a massive level. And then yesterday we broke 11,560, and that was another massive level. And that's the neckline of the head and shoulders pattern that we can see on that chart. We've recovered to get back above it this morning, but already found sellers, and found sellers at a really important level as well, because we actually found sellers this morning at Wednesday's low, which we didn't get, so it was a gap, if you like, and that's exactly where we found sellers today. If we close below 11,560 today, that chart says we can go to 9,700.
Okay.
9,700.
Again, that looks like a topping pattern to me, sort of head and shoulders, a weak right shoulder.
And head and shoulders has a measuring technique, and that measuring technique suggests that we can go to 9,700.
9,700, wow. Okay.
I mean, that's a long way. We've got 10,600 before then, and we also, and obviously this is really key where we close tonight, and 11,560 is the key level with respect to that.
Understood. Let's wrap up with the FTSE.
Yeah, well, if you read the papers in the UK, then everything's going to rack and ruin because of Brexit and everything. But actually, that chart is much better looking chart than the DAX. I think you'd say you could argue the DAX has broken to new lows for the year yesterday. This hasn't. This is still holding. It's holding. It's holding the 200-week moving average, which is that purple line.
Okay.
But again, it's had a pretty difficult few weeks, and we're potentially 6,950 is a big level, 6,770 is a big level. If we break those, we go to 6,200, and and that's where most of these charts are pointing lower for me right now.
On that note, Clive, we run out of time. That's Clive Lambert from Futures Tech. Thank you very much indeed.
Thanks, Nick.